Hi, good morning, everyone, and just thank you for taking the time and just letting Mandy to help have some help today for the meeting, and she's gonna help to meet all the people. Hi, good morning, everyone. Hope you guys are well. I'm trying to get some help today. Thank you for everyone joining. And just want to take the time and let you guys know this is a Zoom meeting. We have been always been doing it for a while now, and so we usually do this Zoom meetings on a weekly basis. And but today we have a specific topic. We're gonna talk about how do we close in 69 units that we are actually got in contract ourselves, and had been working on this for about a month now. Got a contract on an early May, so on the 6th of May. So we got a contract a month now. But yeah, really want to share some of the things that I've been able to have the opportunity to talk to investor from KeySpire, investor from our mentor, from other networks that I've been have opportunity to connect with, and really want to take on the, I understand that's with on the meeting background, that's there's some audience from that's investors from US, but primarily a lot of investors, like including myself. I'm from Canada, and I really want to share how how we can actually buy apartments remotely from Canada. How do we specifically, when we say take charge on closing 69 units, I want to share how we can get along, how you can attract the deal, and how you can cash flow if you're passive investors, and how you can partake. So yeah, no, I just want to take an hour time and to share how to do some of those things, and and it's really high level, and I would love to connect. I would love to connect because I'd love to share how we'll be able to do it and how we'll be able to do it with investors. First of all, for many of you who know me or haven't met me physically in person, thank you for taking time, joining the midday. I know this is very precious time of yours, and whether you some of the investors in Florida, some of the investors in Toronto, some of the investors in Vancouver or in Calgary. So thank you for taking time to join us to the midday, and whether it's your lunch break or whatnot. And specifically, I want to say very thankful for receiving and doing or responding my text messages and email communications And I greatly appreciate that. Thank you for all your kind response, and thank you for taking time again. So as I said, some of you guys has been connected with me with Peg, some of you guys connected with me with Keyspire, and all you mentors. I have great opportunity to meet with some of you investors or different sorts from different country. So I just want to take a time to talk about one deal that we have got on contract today, and I'm using as a case study at the same time using it as a kind of like topic for investors who would like look to join, but really connecting and sharing how we able to get on contract, how do we do that, specifically on the 4 questions that I have talked about on the descriptions. But a little bit about myself. I know not everyone's know me, and so quickly, 30 seconds on myself. So we started investing in 2006 in Canada, and we started like a lot of investors in single families in Calgary. And then we started investing in the U.S. in Phoenix in 2012. And so our first multifamily project in 2017 with investors. And I first joined Keyspire in 2016 and Peg in 2017, 18, and other networks. So thank you for being here all together with me. And again, this Zoom meeting, this kind of settings is I want to intend to make it that is for connecting, is for people who want to start out to do it, or who people or investors who have interest to invest in US or invest in apartments and they don't know how, and whether they want to actively investing or passively investing with me. So I love to help. I love to share what I know, what my experience is. And so yeah, so that's what meeting like this is all about, to connecting and to connecting with investors, connecting with friends, and from different part of the world, or North America. So I have done Zoom. So we have done something like 20s, over 27 Zoom calls in 2020. And so we have done a lot of meetups along the years. In fact, we started in meetups, say that it's like 30 in 2020 and 21. But we have started meetups in 2017 and connecting to investors locally, connecting to investors in US and Canada. So I'm having fun. And but for most of you coming here today, as I want to give some value to to all of you. So we talk about in US investing apartment, which is great, but long story short is like, including myself, when I started doing in 2017, is not as straightforward as it is. We have problem trying to get loan approval. We have problem trying to get lenders in the US how to lend money to us as a Canadians, and we have troubles in how to structure the tax efficiently, and how to find the legal professional to help us to structure it correctly. We work with and find, and we still be finding. Eventually, be able to find tax efficient structures, but the tax part is really, really huge as investors, as all you guys knowing that. How do you get when we say that when we are presenting a deal 18% per annum, how do we structure the deal that makes sense for investors, that able to make it tax efficient, that is not double taxations, but is also not taxing at the company. So taxing is really, really key. So we work with accountants, cross-border accountant, cross-border legal professional that is international, and they know the in and outs of how to do it properly. And so we want to share about that, right? We want to share how we have been doing it, and able to work with and partner with and help investors to achieve that kind of return in the tax efficient manner. And then, and other than that is, how do we find good property and a good property price? We got on this contract, this property, 69 units, which I'm using it as a as a topic today is how do we find those, 30,000, 40,000, $50,000. I know a lot of investors in Canada, they are not able to see that, or they may not be have the relation doing that. And I would love to touch on a little bit of that, how we able to find those property. And and then the last point is, we on the last project, we are lucky and to be able to work with partners, investors like yourself, to be able to put in the capital to work, but at the same time create a substantial amount of equity. How do we able to do that? When I say creating, you know, 900,000 equity in 15 months in our last project, is what I mean by that is how do you as investors, by whether you want to partners or whether you want to passively or actively investing, how do you able to look at something that we're able to done on a track record basis, and to kind of give you a little bit of comfortability or comfortable, and doing yourself or doing with others or doing with us, it doesn't matter. But I want to share that that is, first of all, it's possible, right? And we have been able to do it. We are lucky they're able to do it. We're partnering with right people and doing the right things, by putting the kind of like like making a cake, the right recipe, right? How do you do that? So I know we have limited amount of time, but I just want to say that I'm really I really want to be keep it as a cognizance. A lot of investors, you are taking your precious time of your day, midday, and join this meeting. So I'm going to touch on those key points. And then what I want to do is, if you guys want to have another conversations, and in fact, I really looking forward to have another conversation with all of you, if you guys are interested and to kind of share more intimately on a one-to-one basis. So this is what I'm going to talk about today, and let's jump on it. So number one thing is we this question is not age old questions. It's not new, so to speak, right? It's how do you get the loan? Everyone, like all of you guys, all of us know, and the bank lending you 70, 80, and sometimes even higher of the capital to invest like ourselves. The question is, when we investing from Canada, or it doesn't matter where you're investing from, but how do you put your loan applications? When I say loan applications, it means that it means that you are approaching lenders. If you have done it before, like we've been doing, is we put together a loan package, make it easier for the lender, for the broker to be able to look at your deal, right? Look at your deal, and to be able to help them, and basically essentially to be able to help you to qualify for the loan. So there's a lot of topics, there's a lot of help out there to be able to help you, but I want to specifically go to the nuggets of when lenders, I've been talking to lenders for the last 2 weeks, many times. I reached out to over 10 lenders, 10, 15 lenders, and to get the numbers for what we are looking at right now. So, but what I'm summary want to say is, those 4 or 5 things is, we're going to touch on that quickly, is, the number one, the math has to work, right? I'm going to show you how the math is going to work, right? And then, and then they are looking at your sponsor experience. So they're going to say, what have you done? And I'm going to show you what we have done. And then kind of as a tying point of how sponsor experience is really important for the loan applications. And then they're also looking at your sponsor net worth, right? When you talk to lenders, they will ask you, so what's your loss? What's your net worth? And then that will help to qualify for the loan. And that's a specific requirements from each individual lenders or brokers. They will want to work with you. And then you're going to find out how that net worth related to the opportunity that you're looking at. And then, the liquidity, the liquidity of the sponsor. How long can you sustain the property if you have, if your property is not able to turn in planning cash flow, planning positively from the liquidity point of view, meaning that they want to have look at you, they have 6 months, 9 months, or longer of liquidity to basically sustain the property when you purchase the property. And then number 5, maybe the most important things is, it's almost like you go into a sales meeting, right? And then you go in to talk to all these brokers. And then the one thing they're going to be always asking is, what's your plan? So I know these 4 or 5 things, if you haven't seen this, it's going to be hard to envision. But so to specifically looking for those 4 or 5 things, because I go through the last 2 weeks, I've gone through this exercise a lot. So I have a lot of screenshot that I'm going to share. So number 1 thing is, the first thing is they say, what is, so let me go back. So the math has to work, right? So it's all coming back to the math, right? So this is actual numbers, by the way, guys and girls and investors. And this is actual numbers, but the first thing to answer you is you saying that you're able to get a loan, right? I'm talking about the lenders is talking to me and talking to probably, hopefully you, if you're doing yourself or you partner with me, then it'll be me. So they're looking at 5 years plan and they want to know that you have a plan, not only actually, what you do, what you renovated, what's your renovation budget, what's your projected income on the top line there, and what's your projected expense on the bottom. And then they want to make sure that you have enough debt service and enough cash flow to basically what they're saying is, apart from the actual executions that you're gonna working with your local property managers and yourself as an asset manager or sponsor, as someone like myself, do you know the number intimately, right? And so do you know the number intimately? So when we say that we are able to work with investors to be able to provide 5 years of cash flow, do we know what we're doing? So it's come back to knowing your income, right? And I know this is like 30,000 miles. I'm so sorry. I apologize for not able to walk each individual line items with all of you. But the point is, when we managers, when we investors going to talk to lenders, they want to see that you have that detail of clarity. Do you know on the per line item basis, what is the rents coming in, right? What is expenses going to be, right? And I have all this. This is what I use for underwriting: insurance, the payroll, the maintenance, and the property tax, utility, so on and so forth. So you got that from your seller, and if your seller doesn't give you that, you have to be able to give your experience. Actually will be able to help. But basically, you actually need to put this 5-year plan in front of your investor, if you're partnering with your investors, or if you needing to get a loan, which including me and every one of us, then you need to put this in place. So again, so you need to put your 5-year plan. And this is the first point, the math has to work. And then with that, you're able to project what kind of return you can give your investors. And your investor answer, you're able to transparent enough, honestly. If the opportunity is great, you be able to translate from the actual experience. If you have done it, if you haven't done it, let's talk to me, and I'd love to share more. And then translate that into financial numbers, and then help your investor to visualize how you're making money. Help your investor to visualize how you say that you're going to give them, in my case, 18%, and certain amount is cash flow. Help them to able to visualize things that will give you a lot of confidence, and help the investor to be able to do that, saying that I'm really putting my money into the mouth. And I mean what I mean by that is you're putting your actual numbers in front of investor. Hey, this is how you make money, and that's how we make money, and hopefully we can partner. So that's how you do it, right? And again, so this is 5-year plan. By no means this is exhausting anyway, and a lot of things is about knowing your numbers. So so that's number 1. And the next thing is, they want they want to know that you're experienced, right? They want to know that you're not new and you have done it before. They want to knowing that you are you have experience on real estate on your bio. What have you done? So create a property package or create a loan package can stress enough to present it in front of investors, in front of lenders. That will help you to basically tell in my case, it's really simple. And just, it's not, you see that this is not 50 pages bio, right? And it is something, this is what we have done. And myself is a professional engineer. And my partners Mandy and Raymond, they have a background of real estate, residential, and in fact, all three of us has done the deal that we said that we said we have done, and we've done in 2018. So what that shows, again, what it shows is actually we want to give a clear pictures of the investors or whoever you partner with, in this case a lender, that you know how to do it, right? And I can't stress enough many calls that I'm going into with lenders. When I jump into with a call with lenders, within the really soon, within a few minutes, they know that you have experience. They know that they want to work with you. But as an investor, you have to be able to give, again, the information in the format that they can consume. In this case, it's a bio. I usually have these few things, and this is not on top of a part of this slide deck. We have a loan package, we have a bio, we have a real estate holdings, and we have a net worth. All this creating ready. When the lenders is asking that questions, I don't want them to wait for me. So it's all in that. Boom, there you go. So the number two thing is about experience. And then you want to talk about what is your real estate transaction you have done. They want to look at how many you have done, and they want to look at how you have done it. So this is actual screenshot that I have provided for my lenders. So again, what this is basically telling them a key picture. This is not my first trick pony that I have done it many times. I provide this spreadsheet for myself to my lenders, and then we look at that. Okay, so they give them so this is two things. Number one, lenders want to work with experienced people, experienced investors, and they will give you a better loan. It's just the way that it is. They want to. Investors the same, right? Investor and lenders the same. They want to work with you, and if you have good experience, and what that does is basically providing them, what you do, and then they give you a better loan. And last but not least, it's they want to see you have a successful track record. So I put in my successful track record here. It's so that when I'm telling investor, hey, I'm partnering with you, I'm hoping to be able to work with you, and Mr. Investor, Mrs. Investor, you control the dough. Don't get me wrong. Capital is a lot of people saying that there's a lot of capital out there, but I want to say this is you have to be able to show that you have done this, and you have done this in a way that able to make capital, make investment, make return for investors. So we have done this in the last projects. We turned something from 1.3 million into 2.5 in 2.5 million in 24 months. So what we have done, right? So we have hired new property management to do it. We have put in 300,000 capital expenditure to improve every single unit to the way that we can increase the rent and increase the occupancy, right? It was a 70% occupied, and then so this is actually outdated. We at 100% occupied. We have 5 people waiting list on tenants waiting list since December. So so COVID, of course, affecting every single one of us, affecting me, affecting investors like yourself, and go to the market and look at the properties. But one thing is about knowing what you do and be consistent in what you do. So I was in the United States 5 times for the last since 7 months, since November. So I have been doing that just so that I keep a tab on my asset, and then I see over 60, 70 properties within that time frame. But coming back to this one is showing the investor, you want to work with investors, and that's really key. But you have to be able to show them that you're able to doing it, you're able to increase rent, you're able to keep the project on time, on budget, and but to saying that is important, but the actual doing it is more key. So show your lenders that you have a successful track record, just like in this case, in our case. And if you don't know how to do it, reach me, and I would love to share. How you're able to build some of this credibility package to help you to move on, right? So but when we talk about the loan side, I think that's it. Okay, well, one last thing, right? They want you to know that you know what you're doing. So they want you to know that, so when you get the 80% of the loan, 70% of the loan, they want you knowing that you have a plan, you have a solid plan. The only one way that you have a solid plan is to put it on paper, right? Put it on paper. So so you see this, this is high level, but you're showing that how much money you're putting on the units, right? How much units, in my case, 4,700 per door, putting on the units. And how do you come with that numbers? In my case, I walk every single one of the units. So I was in this particular property, 69 units apartments in Dayton. I was in the apartments and on the ground and on the common areas, and also on on the common areas, which is hallway and the laundry facilities, the manager office, the maintenance rooms. I was in all this, and plus all the unit, and take all the pictures. And on the 12th of May to 14th of May, I was in there working and walking every single areas with my contractor, with property managers, and that's how I come up with that granular level of this is 4,700 per door. So I have put in a budget for every single unit, and then I put in buffer for roof, and I put in buffer for parking lot, right? And because they may not need it, but I never like surprise, and you believe me, you also don't want to be have surprise. And because you want, when the lenders and when the work is here, you want to be able to have the capital to do it. So I put in main, you see that line of the main office, laundries, hallway, and then I have a subtotal, right? 484,000. But then, and every one of us knowing that, as an investor, that, I know that, that's always going to be overrun. You heard the price of wood is going 6 times in the last eight months, last 3 years. I know it's come down a bit, but everything's going up. So you always want to put in a good buffer. We put about 11-12% buffer, and that's how I come up with that budget. What I'm showing you here is, number one, if you're investors, and what I'm showing you that I know my numbers, right? Number two, this random fund budgets, I'm showing it to my lenders. It's funny thing is, when I'm showing this number, they don't answer any more questions. They won't answer, how do you know? They won't answer, do you cover this? Do you cover that? So what I'm showing is kind of like the professionalism that I'm showing my lenders. I know what I'm doing. And because I study this, I studied with my team, I studied with the team who give me the price. So I walk the unit, I walk the property with my contractor, with my manager. So that's their numbers. Not only that, this is the people, this is the team that I worked with for my last project. So I know the numbers is solid. So I know they're not giving me just, hey, this is 4,700 per doors. This is it. So so that is key. To knowing that, to that degree, is key. To knowing that degree and able to tell our lenders, that's also key. So that, why is that? Because they know that we're not overrun. And if that's overrun, hey, then you have the buffer. So you want to do the best job that you can, right? You want to do the best job that you can, and telling them, the repositioning plan. And I kind of put it on top there. How long it takes to reposition an asset on budget, on time, because what you are projecting with a gross rental income increase and then you have stabilized values in 15 months, 12 months. So can you do that? So this is the plan, and this is how solid it needs to be when you talk to the lenders. And when you talk with from strength, and when you talk with the numbers, when you talk with you're ready from your experience and rental budget and the 5-year plan, this is how you're able to get the capital from lender, right? So I hope that helps. So the second things is how do we structure, right? As a Canadian, I'm using the Canadian as an example because I know understanding that a lot of investors in the background are Canadians, right? And I'm Canadians too. I'm biased, but I love Americans. That's why I go to US and buy, right? But how do we structure in a way, to be tax efficient? Is there's challenges, there's opportunity, right? And I listed here for the investors, and for all of you. It's not the easiest to find cross-border accountants, and it's not the easiest to find the structures that actually works. But for example, you don't use LLC, right? For Canadians, you use LP, and you don't use one tier structure. You use two tier structures, so that by the way, you get the right legal cross-border legals and accountants to do the work. But you do two tiers such that American investor can come in and to be able to invest from the US side, and then the Canadian investor can come in investing on the Canadian limited partnerships as from the Canadian side, so that the limited partnership is such a great structure that you don't pay tax on the company level, which is the limited partnership. But okay, I didn't put it here, but really one key thing for investing in a limited partnership structure is the taxes flow through. And so we talk about that. But as limited partnerships, you don't have unlimited. So again, as an investor, you don't have unlimited responsibility when you invest. And that's really key thing when we are investing into another country, even though finding the great asset to be able to invest 30, 40, 50,000 per door is great. But as an investor, we want to able to work with the correct legal attorney and lawyers to be able to structure that. And this fulfill that. I'm not going to spend a lot of time on this, but long or short is there's opportunity to be able to find those right professional, and we have access to that by working with them 5 years. And we have access to accounting professional to be able to do those kind of testing, whether it's at the IT numbers on the first time to be able to do the file tax in the US. But the really key thing is there's no double taxation. When you're investing in right structures, you don't invest in the double taxations format that you only tax once. And US tax is lower than Canadian in general. So what that means is you pay what you pay as if you were investing the same amount of capital in Canada, except that you just pay a portion of it in US. In fact, when you're investing in real estate, the 9 times out of 10, and then even including our case, you don't need to pay tax because it's a depreciating asset. And we also structure it in such a way that is called returning of your capital, meaning that during the whole 5 years, you're not paying tax anyway. Plus, the asset is depreciating during the 5 years anyway. On paper, it doesn't make money, but on actually, of course, you're getting return. So what does it look like when you say 18%? I'm using an example, but this is also real numbers. So again, this is a real number that we are using for investors. But just take 50,000. I know I'm really sorry. This is not the most beautiful figure that I have created. I understand some investors have given my feedback. This is ugly. So my apologies for that, but I'm trying to do my best to explain this. So let's say investor, Mr. and Mrs. Investors say, hey, Howard, I want to partner with you. I want to invest with you. I want to see how my $50,000 US can grow over the 5 years term. This is how it works. We have a cash flow component and we have a growth component. The cash flow component is distributed during the holding term. 5 years. And then at the end of 5 years, there's a growth component. So this investment is 18%. I'm going to use this as an example and talk about it. So 7% cash flow during the whole during the 7% cash flow during the holding term. So year 1, 7%, year 2, 7%, year 3, 7%, year 4, 7%, and year 5, 7%. And this can be distributed on a quarterly or monthly basis. I know investors love monthly, so we basically saying that, investors, we want to work with you and we want to give you what you want. So 7% either divided into the quarterly, which is 4 checks, or divided into the 12 months, which is 12 checks during the holding years. And then there's a growth component, which is 11%. 11% for first year, 11% for second year, third year, fourth year, and fifth year. So 11 times 5 is 55, as is illustrated on the bottom of the table. So again, investors, if you're looking at this, what it does is basically telling you as a total of 90% return on investment on your 5-year term of your investment. That's how it works. So at the end, you get your original capital, in this case, $50,000 as an example, and then you get a total of 90%, with 55% of that is growth, right? I mean, when we exit, and when you exit, and then the 7% every year is the cash flow. So that's how the 7% plus the 11% growth works. So at the end, you get your total return of 45,000 as this example, because it's 90% return, and so 7% of that is cash flow, and then 11% of that is growth, and then you times it 5 years. So stop me, and I'm gonna jump on to next slides, and so this is basically what I said, right? And I put it in the words setting so that investor can visualize, how because we want to work with investors like yourself. We want to let you visualize this 7% cash flow and 11% growth, and then every year is 18%, and then your times it by 5 is 90%. So you can reinvest, we can deploy your capital at the end of 5 years to another project, but this is not the default option. The default option is give the investor return and total and the investment back to the investors so that you can do whatever you want. Because that's what I'm saying in this is not indefinite. What I'm saying is this is not perpetuate, right? As an investor, you want to see your capital. We want to give your capital back to you so that you can turn again in the next investment. Imagine this: if you have 90% return on your first project and work with us for 5 years, the next time you're going to have 90%, which is 190% of your original capital. And if you want to invest with and other needs, you do it. If you want to keep doing it, that's what we're saying, option to reinvest, but it's not obligations. 2 things that I added to this slides. Number one is you getting the revenue, we getting the revenue from the property. So it only makes sense that you're going to get the cash flow from day one. There's no waiting period, 6 months or anything like that. So you're getting the first investment checks when we close it. And then that's the time that we're going to be counting 30 days or first quarter. And another thing is all financing is USD. So whether that is your investment. So what we are saying is, investors, we don't want to make any money from the exchange. If you're Canadian investors, we also don't want to lose any money on the exchange. So what we're doing is we're getting 50,000 US into the lawyer escrow account when you invest, and then all the cash flow is back to you as a USD, and all the returns back to you as a USD, and you decided what you're going to do. So that's how 18% works. So I'm going to switch gear a little bit and talk about the third things. How do you find properties at, in our case, $48,900, $48,900 per door. So number one key thing is the relationships. You want to create a relationship with your real estate brokers in the US, right? And you want to nurture it, you want to initiate, you want to spend the time. And that's how we're able to do that. And as an active investors, and you're passive, I get it, and you don't want to spend your time needed spending on what makes sense for you as investors. So we work with investors so that we create a relationship, we work with the brokers to find the deal it makes sense, to underwrite it so that it makes sense, to get a loan that so that it makes sense. But ultimately we doing everything for ourselves, for investors, so that we keep relationship with the investor, and in this case on the broker, so that we find those deals. In this case, we know the brokers for 2017, and then we have this relationship with the listing brokers, which is at the same firm and same broker firm, and then that's how we get a deal. And we've seen deals seen deals like this all the time, because we create a relationship and we keep on nurturing the relationships. And then I touch on this. I have been in the U.S. since November for missing the words here, for 5 times. I was in Ohio in November. I was in Ohio again January. I was in Ohio again March, and I was in Texas April, and I was in Ohio again May. So I know I would need to go be in Ohio when we close, or before that. So we walk 70, 80 properties for the last 6 months, and we underwrite 500 properties for the last 6 months. So that's how you do it. That's how you're able to get good with, right? If you want to learn how to do this, or you want to be able to partner with someone that have that kind of experience, and this is it, right? You want to do the work, and you're able to show that you're able to do it. And that's how you find the property. There's no shortcuts, and you don't want shortcuts anyway, because it's dangerous. We talk about a lot of capital. We talk about big asset here. So you want to be able to, again, get the good relationship, get the good deal, and doing enough underwriting to be able to get good at that level, to can create the 5 years pro forma that I show you, and have that kind of renovation budget that I show you, and create the property package, and do answer for it. By the way, I have a property package like this, right? I property package like this. It's not excess or anything. Really, it's that it shows. Show it here quickly. Gonna show it's sorry. Was exact summary, right? What is apartments amenities? What is the area like? What's the household demographics like? What is the picture like? And then what's the investor like for the investors? What is the area? We talk about it, but our philosophy, our track record, and our experience. So we want to show that, but don't do answer for it, because I want to show that how we be able to do that. And yeah, so that's how we present the informations. And so we talked about here already. So this is our track record, how we able to create that capital, create that that buffer, the equity, the capital 100,000 with investors in less than 2 years, and is by doing purposeful renovations, by doing new managements, new have a budget, stick to the time, and raise rent. And how we be able to share that is, by working with investors, working with investors to be able to help us, and we're able to help them to get the cash flow. Some of the investors I'm showing here is, we have the good fortunes to be very grateful to be able to work with them and to partner with them, to give them a cash flow, give them a growth component at the end. So we're really thankful to working with them, but also we knowing that creating relationships with the investor is very key in what we do. So that's why I have investor meeting like this. That's why I have Zoom call like this, to showing that we are professional, we're serious, and we want to work with you. And if you want to learn about how to do it, and do reach out to me again, I want to share how we were lucky to be able to learn how to do that. So do reach out to me, because I don't mind sharing with investors who are doing something similar. That's what we're doing. And this is how we present our information to investors. As a summary, I know that I'm kind of using this as example, and for investors who are interested to learn more about it. So this is what we're talking about. So again, this is Claypool Apartments, 69 units in Dayton, Ohio. We own one properties already within 3 miles north. And in fact, that is the property I showed you on the previous screens. And we walked this property, 69 unit, on 12, on 13, as I mentioned it, we projected to be closing on the 25th, 25th of July. And we have explained to you, that's how we do it. We hire, we work with cross-border legal firm. Gowling is international attorney. So they complete our LP structures and the limited partnership agreement with us. And that's how we're able to work with investor to be registered in, and we have the legal documents so that they can review. But on a high level, 30,000 miles on the top, this is how we're doing it. So we're increasing $150 to $175 rental increase, right, on this Claypool Apartments. And how we've been doing that is really come down to executions. We knowing that by walking all the units and by looking at the leases, and I put it right here. And this is all the leases. And I'm tagging it, I'm highlighting it. I'm taking one so that you can look at it. This is all 69 units of the leases. And I'm taking one right here. And so on the lease, you will see what are they charging. In this case, 628. And then 628 is the monthly rent, right? And then on the third page is also showing that how much they're paying on the utility sewage fee, and in this case $15 per unit. And because there's so one occupant is $10, two occupants $15. So what we do is basically based on actual leases, right, on the rent premiums, that when we doing the due diligence and come up with, okay, this is how we can improve the rent. And then that's how we create a 5-year plan, right? The 5-year plan that I showed you at the beginning. And then from that, we're saying that, we are able to give investor 18%. That is how it works, right? You can come up with just say, I think it's 18% or 7%. So all this has to be based with the math. All this has to be based with how much you can increase the rent. And that's how the 18% is based on after you do all the calculations. And then 7% cash flow. This is the investment that 69 units, 7% cash flow. And the investment period is 45 years. And that's how we look at it. How much rent increase? What is the lease that currently charging? Can we push it? And then come up with a return that makes sense for investors, makes sense for you, that you can invest, makes sense for others who want to partake in a holding term of 5 years, 4 or 5 years, and then we give the cash flow, we give the value add, and we give the growth to investors. More highlights. So 69 units, 3.3 million and 3.3 million and 48,000 per door. And we explain that we are successful. We have successfully managed, and we still own today. 2017, we put on contract, and we purchased 2018. We still own that property, 48 units, and we increased it so 1.3 to 2.1. That was last year price. Now it's 2.5 in 18 months. So, and then on a high level is because we love Dayton, because Dayton is a city. Actually have 800,000 people within the Dayton metropolitan area, and we know the area. We know we can do well, and we know that market on the back of our hand, and we have the people locally that are able to help us to execute it within the time frame, on budget, on time. And we know our rent increase because we know the market. I traveled to that particular market 4 times, as I mentioned, 6 months, within time 6 months. So that's what we presented to investors. How do we it's a systematic when we say that it's 7% or 18%, 7% cash flow and 18% per annum. It's a systematic underwriting. It's a systematic managing, repositioning, and working with local team and active management. So we buy right from first date, and we give cash flow to investors immediately from day one. And then it's a solid market. And so that's why I go and I keep going to, I call it boring market like Dayton, because boring is good. Many years ago, some investor tell me, and I keep using that word, boring is good when you're investing in solid asset, because what you want to do is you want to do what we're doing is not letting the market to dictate your appreciations, but letting your work, your actual renovations, your repositioning of the asset to dictate the appreciations. And I'm still from Keys Buy, this is what Keys Buy always say: active appreciation. Absolutely correct. You want to, because you can control the work you can do when you know the market, when you know the people, when you know the execution strategies. You know that you are acting on to the active appreciations with your strategies, with your plan. That's how we do it. Hey, I'm really appreciating for the time. So I'm really conscious of the time. We are at 50 minutes, so it's almost to the end. So just to wrap up, so we talked about loan application today. We talked about structuring, tax, how do you structure your holding entity tax efficiently, and how do you find probably what we're closing at on the end of July. It's less than 2 months time, and then how we share great cash flow by working with and working for investors like yourself and like others. And I would love to let it just like this. Hey, this is if you are, and I'm really grateful for talking to all of you. If you are in any case want to hear more about the cash flow investment, I'm so grateful that I'm very glad to be able to talk to you. I haven't been able to look at the comments. I'm letting Mandy to be able to handle that communications. But this is what we're talking about. We are at right now, we have 75% committed capital. We putting 300,000 of our capital. So we are committed ourselves of 30% of the skin on the game. So we're closing on the 25th of July, as we talked about. Minimum investment is 50,000 US, but we do apply discretions on various scenarios. So, and if you want to talk about us, we would love to chat with you. I just want to take the time and say thank you for, and then also I'm going to take the host back from Mandy in case there's questions. So now is the network time. So raise the questions. I'm just going to try to see if I can work this here. If I can. Sorry, I'm kind of chat. So let me see if I can take back more participants. So wow, there's a lot of thank you so much for joining, everyone. There's a lot of you. I'm going to reclaim host. So let me see if I can unmute all. So I have unmute every single all of you. I don't know whether it works. Just want to say thank you to take the time to join. And so I have this contact, howard@haytobrick.com, and I have my phone number here. So please raise questions, any questions. I would love to be able to try to address that, trying to share how we get loan close, how we get probably like this. and I have, oh, I've seen a lot of familiar face. Martin is here, and I think Hillary is here. Hi everyone. Sorry,
Hi.
I was trying to deliver the presentations, but I just want to say thank you for all of you. Really grateful to be able to see you all online. I specifically very grateful for everyone who enduring my messages and really thankful for communicating with all you. So let me know if you have more questions, and I'll be here. I'm just here opening to every one of you guys. If you want to chat, do let me know.
Oh, I do. Hold on, how do I unmute? Video.
Hi, Hillary.
Hi, Howard. I can't do the video, but that's okay. I just thought that was awesome. Thank you. I mean, I to understand how you raise the money and the loan process and everything. I didn't really know all it took. So your gift is you are the numbers king. It's in the numbers, isn't it? You are the math. You are the financial, and you are everything. I think in this on your projects. I think you do so much. Obviously, you're hands-on, completely. So I'm honored to be working with you as an investor.
It's an honor to be have you, like, you know, from us. It's we understand your hard-earned capital. It's our fiduciary responsibility, Harry. So right back to you.
Yeah.
It's a marriage between manager and also financial sponsor, a financial supporter. Maybe I should use it. It's a win-win, right? It's it's you can't just have one, and we're so grateful to be able to work with you.
You too. Thanks.
Hey, Howard, I have a question for you. Is that cool?
Oh, please. Hi, Chris. How are you?
Hi. Very nice to meet you. Thank you for inviting me to join today. It was very informative. I learned a lot. You mentioned that you were down in Texas recently. Is that a market that you're looking at getting into, or are you currently in that market? Just curious to know your thoughts on that.
Yeah, you know, very good questions. I was in Texas because I see a property that looks very good on paper. But you know, long story short is no, we're not. And we come to that realization, you know, strength is really important when you're focusing laser focus on one thing that you're good at. In our case is Ohio. In our case is in Dayton, is in Cincinnati. So we intend to keep doing that. But by no means when so answer the question, by no means when we are focusing on one market, Midwest and Ohio, Kentucky, and that area, doesn't mean that we don't spend the time, right? And to really understand other market. You know, there's a lot of good market, including Texas. We were in Lubbock for a week and walked the cities and you know, but no, we are not in that because we understanding that in order to do well, you have to be able to have the strength locally, and we create the strength that we have in Ohio since 2017-16. So people do know us, people do want to work with us, and we have a good team there. So hopefully that's answer your question.
Yeah, absolutely, it does. Do you think Texas is the reason I'm so curious? I'm actually down there next week looking at some properties. Do you think it's a little overheated though to make the numbers work? Stuff that I've looked at preliminarily looks like it's just like the market's just so hot. It's not a boring market, I guess, as you say, and I don't know.
Where were you looking at? If you don't mind me answer that, Chris.
Looking at more like suburbs of major metro centers. So, you know, like the suburbs of Dallas, the suburbs of Houston. Lubbock is one that I've kind of looked at a little bit as well. Not like super small markets, but not right in the city centers either, I guess.
Yeah, no, it's that, you know, So number one is by no means I'm an expert in taxes, so let me declare that. But I do look at deals all over US, right? I look at deals in Texas, I look at deals in Arizona, I look at deals in Florida, I look at a lot of deals in the US. Um, it all comes down to the math. I hate to generalize it to say that, is market too hot. The truth is, that obviously, no matter how hot the market is, there's always great deal, right? And it come down to, one quick story is my offer to the 69 units we're closing in less than 2 months. Our offer was not the highest bidder, right? We're second bidder, we're the second highest. The reason why we're able to get that, because of the relationships again, with the relationships, the broker knowing that you can close and you will close. But it's don't get me wrong, U.S. market is very hot, but also be really careful where we're looking at. Texas is a great market. It's always been. But it's really you mentioned Chris, you mentioned Texas. I quickly touch on that is that's oil market and like Odessa, like on like or the oil town, and that is and then also there's some city closer to the coast that is really relying on the refinery, but that's major cities like Dallas. That's basically is 7 million people, right? So it's hot, but it's you do have to look at which particular city you're looking at, because small city, as you said, is more risky. Oil has been down, right? Something like what I was looking at online. It's like some of the properties was really highly vacant, right? So it's not as boring, so to speak, but it's also for an investor that's maybe more looking for opportunity. Less, maybe look at the oil is going up, it is going up to $70 right now, right? So things like that. But I do think Texas is great. I just need to go there for myself to really trying to, the boots on the ground. Yep. And to kind of get to know different part of the city, and huge market in the US, and that's what I love about US, and that's what I would continue to help to invest and with my investor to the US, to have the cash flow, to have that cash flow component that not only that you can do the repositioning, but the cash flow component.
Thank you, Howard. Appreciate it.
You're welcome, Chris. Hey, thank you, Chris, and thank you, Harry. Thank you. A lot of a lot of familiar familiar names, and particularly thanks to my better half, Mandy, and able to help me to meet all of you. So Carlos have a question. I say that you raise your hand. Feel free to say answer me the questions. Yeah, thanks for Mandy for able to take the time. I know that's a pretty big crowd that I just don't want to be distracted and back and forth. I want to focusing on delivering the presentation and to connect with all of you after that. And thanks, Mandy, for doing that. And really, thanks for taking the time and to join me, every one of you guys.
Hey, Howard.
Hey, Carlos.
Yes, Carlos, nice to meet you. And I don't know how to put my camera, but anyway, I just want to thank you for the great information you share with us. Me and my wife, Yvette, we are very hungry. We are very hungry to start investing because we started with Key Spires in May 2018, and we haven't done nothing. And now with the pandemic, so we are kind of stuck, but we are sure gonna get in touch with you so we can have maybe more conversation. Maybe we can visit close to your area, and we would like to do some business with you guys. Okay.
Hey, Carlos, thank you so much for saying that. Yeah, no, I looking forward to connect me. My email is you can text me later on, and then we jump on the call, and we're looking forward to connect and looking forward to help, and hopefully we can do it together.
Yes, sir. I appreciate that.
Thank you. Thank you.
Thank you.
sees there's no sequence here. You can I think I see two other race and Harry and Lizard. Hey, feel free to jump in, Harry and Lizard. This
Okay,
is
can I, okay, sorry, I know, I'm sorry, I know I already said I would talk to you, but my
Hey man,
question.
how you doing?
Oh. Okay, go ahead.
I'm alright.
Go ahead.
I'm alright. It's been more than a minute. What's going on?
Hey.
Oh.
No, I don't want to be tired of work. I need to keep working.
So sorry, I'm just taking an executive decision to mute one up. So sorry about that. I think he's on a conversation. I'm so sorry,
Okay.
Adri. So
Oh yeah, so just quickly, Howard, I had put it in the chat. I wanted to know about the taxes because I don't quite know if we have to file in the US, if we are receiving, like as investors, if we don't have, if we're going through you, do we have to file taxes in the US and or do we have to declare them here in Canada? Because I haven't done that.
So very good question, Harry. So
Yeah.
first of all, if your investment is, so let's answer your question on the US side first. So even though you're not getting really real income, that's because you're losing money on paper because it's
Right.
depreciated asset. Yes, number one is you do have to file the US tax and the way to do it is you, first of all, the first time that you do file the US tax, you get an ITIN number. So it's ITIN, so IT
Yes.
number. So you
Yes.
get that, and then they filed it. So it's $300 to $500 per year, depending on the accounting profession. I can hook you up. And
Okay.
then so that's first questions, Henry. And then you get a slip from me, and then that's you just file that based on my slip and give to the accountant. Accountant will help you for that. And then number two is when we invest in the US. So that's a threshold that if you are less than 100,000 Canadians. So and we
right.
talk about US fund. If your total ownership is less than 100,000 Canadian, so you don't have to declare it because it's less than the threshold. But if you're over that, then you have to declare that. It doesn't mean that you have to pay tax again. It just means that you have to declare that interest or
Got it.
interest
Okay.
to your to the CRA. Yes. So
Got it. Okay.
that's how you do it. The two steps from to the IRS and the CRA.
Got it. Thank you.
Yeah.
Great.
Well, thank you, Hillary. And I'm just muting my stuff here. No, it's very great to be. Feel free to jump in. I see. So I think Carol is going to be lower your hand, and then I'm going to lower Hillary hand. So I'm here to continue the conversations. If any questions, you want to do it yourself or you want to connect with me and trying to do it, I love to have the conversations. I'm really grateful, particularly on to be able to chat, to be able to connect with KeySpire, Peg, LE managers, to all of you and spending time. And you guys have been very patient with me. I'm just going to say to all my messages, I'm really grateful to be doing it electronically. And you want to get on the phone, I would love to. I love to get in the phone with you. So just let me know, and then want to connect.
Okay,
Thank you.
thank you, Howard, for letting me join your call today. I'm Lizelle, and I'm also a member of KeySpire.
Hi,
and I'm hoping to ask questions for you. So the question for me is, I have a corporation set up. So how is going to be for a tax for US investing?
Very good question. I just want to make sure I know your last name is Lake Ken. It's first name is
Lake,
Lake
Lizelle,
Lisa.
Lizelle,
Lizelle.
Lizelle Lake.
Thank you, Lizelle. So, so remember, very good question, and thanks for raising it. Remember that we talked about creating a structure that is efficient for Canadian investors. So, so that comes in hand to hand with your questions, very importantly. So when we invest with Canadian investors, which we experience, as Hillary has mentioned, um, so we create limited partnerships in the Canadian. So we call it Canada limited partnership structures that Canadian investor can put the capital onto the Can LP, just call it Canada LP. And then the Canada LP is, first of all, is a flow through structures, meaning that the taxation's attribute of the limited partnership doesn't hold any tax. So there's no business tax on that holding entity. So that is the nature of the completely flow through. So flow through meaning it's just flowing all the way to the investors. So you as an investor will file the Canadian tax as what I explained to the Hillary. So, but then when we invest in the U.S. Investments, just the one that we have been talking about, is we have to borrow the money from the U.S. right? In this case, 80%, 80% LTV, which is 80% LTV and 100% renovation. So we're getting 2.7 millions from the U.S. lenders, and we're getting 100% of the renovation capital, which is $539,000
Mhm.
from the bank, from the lenders. But in order for them to give us basically effectively 17% LTV, because when you blend it all together, you calculate 17%. So they require us to be able to hold that asset on the U.S. U.S. limited partnerships. That's how they lend the money to that, because they are basically 83% capital is from them, and then the rest is from us and investors. So to answer your questions, you do the following, and by following the U.S. tax and then following the Canadian tax, but the taxation is not double taxation, as I explained it, because of the flow through structures. In essence, there's no tax involved. Basically, you file the tax return, but you're not paying tax in the 5-year term, because you basically is a depreciating asset. But you do, obviously you get the 7% cash flow. That's a key part. And then at the end of it, of course, that's going to be capital gain, right? That's going to be capital gain on your side and the Canadian side. And but it's all come down to that is you are not different. Maybe I'll just put it this way. It's not any different when you're investing in Canadian asset or versus U.S. asset, because we structure in a way that is flow through all the way to the investors. And we have this structure since 2017, and we've worked with attorney to creating that, which is Gowling.
Okay, sounds good. So my second question too is, so for the investors that you're looking for, is it only a money partner or also a JV partnership in terms of title? The names on the title.
So very good questions. Thank you. We like to say this. Every relationship is new, and we would like to work with small. But start from small. I still have some investors investing 30,000, from day one, and I love them because that's how you keep the ball rolling. But when we're looking at it, it's kind of like when we're working with Keysbuyer. And that's we understand a lot of investors have different asset, right? Some of them have asset on financial strength, some of them have asset on doing multifamily. So we welcome the conversations. If you or if other investor, actually including everyone here on meetings, and have have this experience, have the financial, the math brain, let's call it, like, the math brain, how to doing it, and to be able to qualify for the loan, particularly maybe is to be able to have the net worth, have the net worth and the liquidity. We love to talk. We love to. I know this conversation is more in person, so reach out to me, Liz,
Okay.
and I want to have the discussion with you. I want to have the debate so that I want to know what you're looking for. I want to see how we can join force together.
Okay, sounds good. Thank you.
Thank you so much for answering the questions, and thank you for in fact that's very good questions. The keys by model is great because it's you can join force, you can join your financials, and you can join your experience, right? In how to managing and run the shows. And so do please send if you can listen, you can either text me or email me. I'm gonna reach out and have hopefully we have a discussion later on today.
Okay, sounds good. Thank you.
Thank you. Lower your hand and lower your hand. Hey, Jed. Hi, Jed. I saw your hand raised.
Good afternoon, Howard. Jet here from Winnipeg, Canada, and thanks for inviting us. I really appreciate what you're providing to the community of real estate. You are making a huge difference, I would say. And just one quick question, because we've been on the fence investing in US. We've been investing in Canada, multifamilies, but now we're looking at south of the border because of the affordability in terms of the buildings and investments with the same amount of cash flow and at the same time higher interest rates. So what I'm looking at is, because you've mentioned the taxation for US and Canada, we're just wondering, have you heard or if 1031 actually applies in any of your portfolio or any of your investment opportunities with investors?
Yeah. So I know. Thank you, Jed. So I'm gonna explain to you, and yes, we have, and the rest of the investors. So we haven't done one yet. But it's so that's also talks. I'm sure you're aware, Jed. Is they are talking about taking it away. So 1031 is so that you can like kind of exchange, and bigger and better. So so that you don't have to pay capital gain tax. Yes. So, but we haven't done that yet, and there's talks that they are going to take away. That's my apologies. That's something that Canadian investor doesn't have it. So we can do 1031 exchange for our asset, and basically, so that when you're buying first one, let's say in this example, I'm using real numbers here. We buy for 3.3 and then put $500,000 into it, and in a year or so, and then improve it to 6, 7, 8 millions in 5 years. So many investors are doing that in such a way that so they sell it, right? And then obviously now you have to pay that capital gain. But if you next time, let's say we sell it for 5, and then but next time you're buying anything that is bigger than 5 millions or larger, then you don't have the capital gain, pay the capital gain tax, and then you can roll it on, and you will use it with professional called 1031 specialist to doing it. You don't do it for yourself. So Jed, we have heard about that. We haven't done one, but we are able to. It's we can do that, but at the same time, we are a growing company. We would love to be able to keep holding the asset at the same time, you either refinance it or working with a financial partner to be able to buy the next one. So so yeah, we aware of that, and you are very well informed, I would say, Jed, even though you do most of the things in Canada. So that's actually, honestly, that's one of the reasons why we love investing in the US, is the taxation is just so much better, and the cash flow is so much better, and the market is so much bigger. You know, I still live in Calgary, don't let me wrong, and don't get me wrong, I'm going to live in, I'm Canadians. Hey, but that's why we're so excited. That's why we love US in that investing perspective. It's just so friendly for investors like ourselves. So
I totally agree. Based on the numbers, US is a little bit more offering for investors and entrepreneurs like us. So yeah, so looking forward to discuss more, and maybe we could work on more projects together. Thank you so much.
thank you so much, Jed. Yeah, drop me an email, and love to connect, or just call me directly, and try to pick up the call. And thanks for the question, Jed.
Perfect. You're doing great. Thanks.
Thank you, Jed. Great, Lord. So hey, this we're gonna open the floor, and we gonna keep it a little bit. And but yeah, for everyone else, please raise questions. This is the time. Probably have another 10 minutes or so, and then we're gonna just call it. But yeah, just if you guys have questions, please do on networks, and raise many questions for this deal, or for just in general for US. Let me close this. So I am calling it. Because so just want to take time again. Thank you for everyone taking the time to join me this last minute meeting. I just set it up yesterday, and want to have the information sessions for 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 the investors, for all of you. And let me know if you have more questions. I'm gonna let you go. And happy Wednesday, happy investing. And yeah, so my contact is right here. So reach out to me, and so thankful to have you all today. Cheers. Bye.
Right. Thank you, Howard. Take
Howard.
care.
Thanks, everyone.
Thank you.
Thanks, everyone. Thanks.
Share more live stuff, live stream.